Super excited to get this going. This is part of a series that we've been doing over the last year. This happens to be a topic that is very new to all of us, or most of us, in that sort of consumer access to AI has been so new that we've just all started thinking about this space. So I'm here to teach a little bit, but also learn alongside of you. Wanted to see where everyone was. We got West LA, San Jose, a lot of California. Anyone international out there? Anyone want to throw in if they're international? Santa Barbara is pretty international for me, just down the street from LA. Okay, we've got Mexico in here as well with Patricio. Great. Usually we try to draw an international crowd, and we will be recording this, sharing all of our insights in case anyone needs to drop early or misses anything. So there's a lot to cover. I want to quickly go into some housekeeping to make sure everyone is ready to go. Hopefully everyone is in the right place. This is our RUVCB workshop series and AI edition. I'm excited to introduce a couple of guests about halfway through. In terms of housekeeping, first of all, would love to get your cameras on. Certainly for when I'm doing the initial 30 minutes of workshop, as I'm teaching anything, I'm always looking at facial reactions to make sure everyone's understanding it. If they're nodding along, it helps me understand that I can keep going. If I get furrowed brows, like Karen is just not hearing what I'm saying or enjoying it, then I know to stay a little bit longer, maybe spend some time on it. So cameras on would be great. Just know the Zoom chat is open. One of the things that we've realized is that any event that we host, the Zoom chat is an awesome place to be. People throw in insights, questions, comments, LinkedIn profiles, and we see a lot of great connections happening through the Zoom chat. Submit your questions within the chat. We'll see if we can monitor them. Two of my teammates are in there, so they'll help me keep track of that. And also afterwards, we might be able to answer them in our follow-up email. So feel free to submit questions there. And then if you hear anything that's interesting that you want to share, feel free to share that on social. We want this insight and this knowledge to be shared as widely as possible. Tag the guests, tag me. Yohei has been great about retweeting and commenting on people that tag his posts, which I really appreciate. And then last but not least, this is going to be a pretty interactive session even before we get to the open Q&A with guests. So if I ask questions or I ask for volunteers, feel free to raise your hand, interact, try to answer the questions in your head. Those types of founders that interact tend to get the most out of these sessions. So feel free to keep engaging. Okay. We're going to jump into this. Before, I want to get people loosened up a little bit and getting their mind going. Can you guys throw in the chat what the most exciting or fun new AI tool that you've been playing around with is? We'll get some people talking about this before we get into the boring AI fundraising workshop teaching stuff. So share. Okay. Hunter talks about Photoshop AI fill. Hunter, do you mind coming off mute for a second and chatting with me? I've seen people talk about this online a lot, and I always thought it would be hard to get off beta. Were you able to get easy access to it, or are you just watching people post?
It's actually through a friend who's a designer, so he had early access to it.
So you've been able to play with it?
Mm-hmm.
And it is as advertised?
It's as advertised. It doesn't always work perfectly. Like if you ask for salmon in a river, you might get salmon fillet in the river, but most of the time it's pretty impressive.
Interesting. I'm honestly, the simplest way to use this that I'm excited is to take the outputs from DALL-E and other generative AI image tools, which spit out their thing in squares, and help them and have generative fill give me like a Luma header image or a PowerPoint slide and just fill that in. Awesome. Thanks, Hunter. Anyone else? Albert, what is Claude? Claude 100K?
Claude is Anthropic's language model. Sorry if it's kind of loud. I'm in a coffee shop, but
all good.
Yeah, they have a language model with a 100K context window, so you can put like an entire book in there, and it'll just summarize the whole thing. You can
Wow.
do some crazy information processing, but I'm looking at
Amazing.
applying that to code bases.
To code bases. Very interesting. Okay. I think what we want to do is, if you guys still have other ideas of AI tools, AI products that you're using, keep throwing them through the chat. We're going to save the chat and we'll summarize and send it through, crowdsource a cool list of things for you all to check up on in the AI space in our follow-up email. Okay, great. I'm glad that got people's heads turning, minds running. I want to do this initial part of the workshop. Some of you have been in my workshop, so have heard this. I'm going to give you a little bit of background on me, just to give a little bit of context. So I was the head of new media products at MLB.com before I became a venture capitalist at Greycroft, generalist investor there for about 4 years before starting down my startup journey. My second startup was Tape, where I was co-founder and CEO, raised a few $1 million for that before exiting in 2020, at which point I transitioned to this line of work where I'm deeply focused on trying to make fundraising less difficult for founders. I first did that as SVB's internal fundraising coach, and now I do that at my own company called Adamant. We do a lot of different things. Mostly it's free content, including my podcast funded workshops like this, my newsletter. So I always start these workshops with this background. Sorry for the San Francisco alarms. I give this background not to necessarily credential myself or try to impress people. It's really to give people context and insight for what I might have experienced myself in order to come up with the insights or the approaches to teaching fundraising that I use. And I give that because I think one of the best pieces of advice that I can give people is around advice itself. And I always push people to look for the first principles or the deeper context around advice that they're given, because advice, especially ones that you'll see online, given to you in passing in a tweet, is packaged in a bite-sized way, but not with the necessary context that you need to deeply understand what they're trying to say. One of the examples I always give is this. So I think in fundraising, startups in general, but definitely fundraising, almost any topic worth giving a piece of advice on, you're liable to find two equally credible people that will give you like 180-degree opposite pieces of advice. And this one in particular, you'll read two different posts about the idea of when a founder should give access to a data room. On the left, we have Andrea Funston, she's a partner at Basecamp Ventures. And on the right, Mark Suster, partner at Upfront Ventures. Andrea is essentially saying the moment a founder meets an investor, they should share their data room. That's one of the best signals I've ever seen. It's amazing. I just had this happen to me. All founders should share their data room as soon as possible. And Mark Suster has a blog post where he essentially says founders should never share their data rooms. So who's correct here, right? Why are they so far off? It turns out, I think if you put Andrea and Mark Suster in a room, have them share a cup of coffee, they would likely agree with a lot of the underlying assumptions around sharing data and how founders should interact with investors and what good signals are. It just so happens that when they share it as a bite-sized tweet or in passing, it sounds 180 degrees opposite. So this is my push for everyone to understand the context from which someone is giving you advice, and then always double click and ask more questions, and don't take anything at face value, even if it's me, although I think you should take most of what I say at face value. Even if it's me, like try to understand the first principles around what we're teaching here. Okay. So that's enough for us to get into today's focus, which is this idea of, are you venture-backable? Raise your hand if you have approached or interacted with a founder or an investor who has been like, I'm not sure this is venture-backable. Anyone want to be brave and raise their hand? Oh, Jason. Okay. Jason, do you mind sharing, when this has happened?
Yeah, sure. I have raised money somewhat recently, and that's gone well. But way in the past, I had an app development studio in New York City, and so I was always wanting to do something scalable. And the first thing I launched was like a marketplace for like, it was called what was it called? Fixie. So it was like all these people needed these quick fixes for like Squarespace and Shopify and stuff like that. So we kind of had like a marketplace where everything was like $50 like to do this. It was like sort of all these little fixed price little tasks. But yeah, we got a lot of pushback on that. Like it wasn't scalable because someone's going to come in. You're not going to have like any retention. It's going to be like sort of these one-time things. So
Yeah.
But yeah.
Yeah, I think a lot of people get this question or this statement of, I'm not sure this is venture backable, Jason. And I think what can be confusing is that a lot of founders will look to their left and look to their right and look on TechCrunch, and they'll be like, that company over there looks like kind of similar to what we're doing, or like not exactly the same, but has a lot of similar dynamics. They got backed. Why aren't we getting backed?
Mhm.
So when I start working with founders, what you realize is that they understand the words that I need to be something that a venture capitalist want to invest in, and I need to be venture backable. But they get confused, or they don't really go into deep detail around what that actually means, so that they can understand themselves a couple of things. One, how do I tell my own story in a way that actually gets an investor excited about backing me? And two, should I even be raising venture capital? Right? Those are two pretty important questions. And the first thing I'll tell everyone as we're getting into this is that every VC, every real VC who's worth their salt will say this in a variety of different ways. If pushed, if dragged into a conversation, I will shout this from the roof, because I've been a VC, I've been a venture-backed CEO, and I've run a profitable bootstrap business. What everyone needs to realize is that not being venture backable does not equal you're running a bad business. In fact, you could be running a fantastic business, and you could be running a really big business and still not be venture backable. And that's okay. We just need to understand where that fits in with your story and what you're trying to build, and whether or not you do want to go raise money from somebody else, and whether or not that means shifting the way you articulate what you're doing, or shifting the way you push yourself in the company that you're trying to build. Okay, so that's what we want to come away with, and especially as we think about founders who are building with an AI component. Okay, so some of the stuff that we're going to talk about today may seem like 101 for a lot of you. I would encourage you to still go through the exercise that I'm pushing you guys around, and not roll your eyes at, oh my God, this is basic, because a lot of people get to 90% understanding and be like, yeah, they understand it, but have never really pushed themselves far enough to like get to that last 10%, which is where I think having a deep understanding really comes out. Okay, so the first basics I'll share with you is this idea of VC portfolio theory, VC portfolio strategy, and how a VC thinks about making bets. A VC is making bets across a very similar spectrum of startups, depending on their stage. They're looking for a very similar size and risk profile bet. And in this case, something that is very, very risky, assuming that 95% of all their bets go to zero, and that one or very few bets in their portfolio create enough return that it balances out all the losses. And that disparity, that difference between their one win and all their losses, is the return they generate for their fund. Okay, this is an important thing to think about, because there are a couple of things. One, if they do not take an approach to looking at all deals in the same way, it messes up the expected return of their fund. And then secondly, if every single deal does not represent the possibility that it could be this gigantic outcome, then it messes up the math for their fund as well. So I could be talking to Jeff, and he could be telling me about this business that is like on the right path. He's an expert in the space. He's validated the problem. And in the course of the conversation, we have this feeling like he's going to build a business that is $100 million business worth $100 million, like, which is insane. If Jeff built a business that was worth $100 million, and then by the end of it, he owned 20% of that company, $20 million, that is life-changing fuck you money for Jeff. It, however, likely will not move the needle in the right direction for a venture capitalist and their fund strategy, which is kind of crazy to think about as a founder. And that is part of the dynamic and the math that we're going to talk about now. So you guys can start thinking about your current business and whether or not you're running a business that is something that should be bootstrapped, one, should be looking for capital to start up, but maybe from angels or other types of investors too, or is actually a business that fits into the math of venture returns and should be something that you guys raise venture capital for. Okay. So whenever I talk about this idea of what does it mean to be venture backable, or what is an investor thinking about when they are evaluating whether or not a company should take their money, there are two main concepts that I think are really important, the questions that are going on in their head. I wonder if you guys could take just 1 or 2 minutes and think about some of the big questions and throw it in the chat. I just want to see what people's quick thoughts around what they think investors are thinking about are accurate, or where people's heads are at. So if you have any ideas about what big questions they're trying to answer, throw it in the chat. Ooh, very specific, Tim. Will this biz hit 100 million ARR? Love it. Moat, defensibility. Can this return my entire fund? Albert, I like that. Rate of growth, okay. Traction, moat, growth. 10x return. Okay. Nate Castillo, are you there?
Yo,
Hey, Nate, how are you, man?
good brother. How are you?
Good. Can you just shout out loud from the rooftop the 2 things that you said you think is going through? Well, actually, first, where in the world are you?
I'm down in SoCal.
Down in
Oh, yeah.
SoCal. It's like Castillo or Castillo? Oh, like,
Castillo. Yeah, you got it right.
yes.
Yeah, so how big is the opportunity? I think trying to evaluate that quickly, and obviously, the problem and all that setup kind of goes before it, but then, is this the right team that could execute this idea? Is something I've encountered, especially in the AI space. There's lots of people coming in AI, with new products, but I think one key example is the French team that's making the OpenAI competitor, that just raised a boatload of money. It's like they're all from DeepMind. They have a great team, right? And that's why they could do it in 4 weeks. So
say a few more words about the opportunity. Like, does that make a ton of sense to you? Do you know exactly why that is the case? Like, why is that the first question that comes to mind for you?
Because I think that's what determines, if it's VC backable, like we're saying, is the unit economics need to make sense to get that return on their, initial investment, right? They're looking at, is this $1 billion, potential business at a minimum, right? So.
Okay, good. I love that. Thanks, Nate, for being brave and volunteering, or brave and volunteering to answer. And Nate and I did not collaborate around this, but he definitely outlined the 2 things that I think are the most important to keep in mind around what a VC is evaluating, which is, one, is this opportunity, does it have massive potential? Massive. Now, I don't use the word big, I use the word massive. And the second thing is this team ability, or is like the elements of this opportunity, is it all there where they actually can realize that massive potential? The second piece is what we're going to talk a lot about with Yohei and Sarah. The first piece is what I want to just outline and double click on so that you guys think about this really deeply, because a lot of people are rushing into the space with AI, but just because you're working on AI doesn't mean you're working on something with massive potential. Okay. So in the remaining, call it 5 minutes we have, I want to run you guys through a quick math problem, because this is actually math. What we're talking about here is math. When it comes to massive potential, there is a math problem that VCs are actually running through, which is, what is the return that I need to expect from any individual investor and investment in order to fit it into my portfolio, right? If I'm betting on BAM Money and Geraldo, and I'm a Series A investor, could my investment, could is the operative term here, if I squinted my eyes, could my return be something like 20x on where I'm investing now? If I try to invest in Ali at the pre-seed stage and he's telling me this story, is he telling me a story that is crazy, but like if I squint, it could happen, and if I did it, it would be 100x? You know, we're not trying to say like definitely could, you know, definitely would triple my money. Tripling your money, if it happens, is great, but the probability of any of these things happening is tough. So what we really need to get to is these VC returns. And what we're trying to help you guys understand is, what do investors need to believe? What do investors need to believe? And it's a math exercise, because what they are trying to do is say, what is my expected valuation at the time of return? Or what is the expected valuation of your company today? Like, what are we investing in? Multiply that by the VC return multiple, and that's what you're going to have to exit for in order for the math to work. So if Tim thinks he's going to raise at a $10 million valuation and he's a pre-seed company, I need to guess it's going to be 100x. He needs to exit that at $1 billion. But the step that I don't think people take is understanding the exit value. They just be like, I need to get to $1 billion valuation because that's what people say we need to get to. Where you need to think about is what it means to create a valuation of $1 billion. The way bankers will do that is they will run a lot of different formulas around present value of future cash flows to be like, well, if this company in perpetuity kept spitting out cash, it would be worth $1 billion if all these things happen. But the lazy way that this happens is by using something called valuation multiples. And the easiest one is to think about is revenue multiples. So what people will do is take an annual revenue number and say, if my company is a e-commerce company and it's doing $200 million of top line revenue, what is the value of the company today? Well, we might do a lazy valuation multiple and say it's 3x top line revenue. That's worth, 3 times 2 or $300 million, $600 to $900 million. If a SaaS company is doing $50 million of annual recurring revenue, we'll give it a 10x multiple. It's worth $500 million. So what I want everyone to do is be like, okay, what's the company that I'm running today? What is my business model? How do I generate revenue? And think about this future of like, well, what does my business need to look like at exit in order to achieve that multiple that investors need? And it should stretch you. It should reflect a version of the future that sounds kind of crazy. Like if you think about the Airbnb founders, and there's this story about them getting pushed about how big their vision could be, because it needs to be as massive as Airbnb in order to fit a lot of the return multiples. Okay. So what we are going to talk a lot about, and what you guys need to think of, what the first thing you guys need to think about is, am I thinking about this big enough? Like, is my company pointed in a direction that's big enough? And then once I understand what that version of the world looks like, when I am doing $100 million of revenue every year, Like, what has to happen? What do I believe that needs to be? Okay. We have Sarah in the waiting room. We're going to wait for Yohei to join us, but I wonder if someone would volunteer and tell me a little bit about their business. We'll walk through this math together. Does anyone want to raise their hand and chat with me? If not, I'd be happy to cold call someone. Okay, we're going to cold call someone. Let's see. Sheila. How are you, Sheila?
I'm good. How have you been?
Good, good. Where in the world are you?
I'm in Houston.
Okay, very good. Can you tell us for 30 seconds what your business does?
It's a SaaS digital mental health tool.
Great. And the SaaS business model, what does it cost to get access to your tool?
An annual subscription is $225
$225.
for
Okay,
the patient. Yeah.
for the patient. So let's quadruple that and say it's
Okay.
$1,000.
All right.
$1,000 a year. Do you know how many patients you would need to get to 100,000? To $100 million?
I would need $1 million.
You would need
Patients.
100,000, I think. Yeah, 100,000. To do
100,000.
To do 100 million.
No, yes.
So 100,000 customers, end customers at that price point. What does that feel like to you? What does that sound like to you in terms of the size of market and what you're doing?
It sounds totally possible. It sounds
fair.
like, but it sounds like it requires a large team for go-to-market.
Great.
Yeah.
So, the almost like kind of like look up and to the left, accessing a part of your brain, which is like creating new thoughts, that is what I want everyone to do, because like, if you haven't thought about what your business looks like at that stage, I'm not sure you're going to show that that's what your goal is when you're talking to an investor, either in the excitement you have to build a big business or in talking about the details of how you're going to get there, or what your business is going to look like, or what the full, product line looks like. Because, what I did was I quadrupled your price point in order to even get to that number, right? So if we stayed at your number, that's 400,000, right? And that becomes a very, very different story, which is a great segue. Thank you, Sheila, by the way, for volunteering. That's a great segue, because both of our guests have arrived. And I wanted to say
What's
a
up?
few things. Hey, Sarah,
Hey,
Yohei.
Yeah.
Hello, hello. Before we get to you all, we had just spent 30 minutes talking a little bit about some of the basic concepts around being venture-backable. But now what we want to do is talk to the other side of the table and talk a little bit about what's going through your heads. So I'm going to give these two awesome guests an opportunity to share a little bit about themselves and their funds, especially. But I'll just tell you, I'm so excited to have both Yohei and Sarah here. I met Yohei as he was raising his first fund, and I've just been sort of a fan ever since, from arm's length and distance, because he's really taking this approach to building in public and building in service of founders, but also in order to become more deeply involved and empathetic or understanding around the spaces that he's been excited about investing in. Loved watching his digital art project, Pixel Beasts, and then just everything he's done to kind of build on top of the tools, the AI tools that have been produced by companies like OpenAI. Loved what he did to push the industry by releasing and open sourcing BabyAGI. And then secondly, Sarah Catanzaro, which I always fumble with in my mouth. As I was looking for other people to talk to and give perspective on, her name kept coming up, and have never met Sarah, even digitally, but doing research on what to say about you, I was just so excited to hear. Sarah did her studies at Stanford and MIT, and way before any of us were most of us were thinking about AI and implementing it. she was using that education to apply it to national defense, which is kind of crazy to hear about. And she's now investing at Amplify Partners. Yohei, Sarah, thanks so much for showing up. I wanted to, before we get into a couple questions about the space, I was telling everyone, I'm just kind of a fan nerd, want to learn too, because this is also new. Wanted to give you both an opportunity to just talk a little bit about your funds and the way you invest in order to give context for what you're about to say. So if we could go with Sarah first, can you tell us a little bit about Amplify, what you guys focus on, stage, et cetera?
Yeah, absolutely. So Amplify is an early stage investor. We focus primarily on seed and Series A investments, although what seed and Series A means varies, year to year, but everything from pre-product to early revenue, I would say. And specifically, we focus on investing in technical tools and platforms. So generally, when I'm discussing kind of the sets of things that we invest in, I categorize them as developer tools, data and ML tools and platforms, enterprise infrastructure. So a lot of systems for technical practitioners. But we do also invest in some vertical applications of those underlying technologies, whether it's vertical applications of AI or databases or distributed systems. My focus within Amplify has been on data and ML tools and platforms, as well as vertical applications of databases and AI. We have these focus areas for a couple of reasons. I think the most important to highlight is just that these are the categories we're interested in. I did spend a while in the defense and intelligence community, but I also spent a year and a half doing generalist investing before I joined Amplify 6-7 years ago. I wasn't very good at it. I remember looking at Glossier, the cosmetics company, and being like, women will never buy makeup online. But I also just wasn't really interested in it. And I think having your intellectual interests aligned with founders matters a lot. You spend so much time with them, or I guess that's kind of the second reason why we have these focus areas. We do spend so much time with founders, and what we've seen is that founders that are building within these kind of technical ecosystems, they face a very different set of challenges from founders who are building in other markets, whether it's thinking about how value accrues relative to compute spend, or thinking about open source strategy. We can spend all of our time navigating those issues instead of thinking about supply chain dynamics for consumer hardware, or the best way of optimizing supply and demand for marketplace companies and things like that.
Awesome. That's a great background, and kind of you touched on a couple of things that I'd love Yohei to talk about, which is this idea of investing in things that you're interested in. And I think Yohei, you sort of wear that on your sleeve, your digital sleeve, and sharing what you're interested in. Can you tell us a little bit about Untapped Capital, what you guys focus on, maybe what the name means?
Sure. Yeah, thanks for having me. Also, Sarah, I saw that you were at Mattermark. I was a big fan of that platform.
I was, yeah.
It's a great platform. I wish it still existed.
I think it does somewhere in the corner of the universe. I think it was bought by a hedge fund after it sold. So
I see. So I'm Yohei with Untapped Capital, most known for kind of building in public with the latest technologies as a way to learn about them and to meet founders in the space. Since starting Untapped in 2020, I've gone deep into, I'd say, 3.5 spaces, really 3 deeply. 2020, I built our whole fund on no code. So we run on Airtable, Softer. I have 30,000 zaps running a month. So deep on no code and automation workflows. 2021, I launched an NFT collection called Pixel Beasts, which did pretty well. That was how I learned about Web3. Integrated with a whole bunch of startups, invested in a couple of those, and then started building on top of GPT-3 in August. I've published about 70 prototypes and tools that I've shared, about a third of which we use internally to help us run more efficiently, about a third of which we share with founders to support them, either portfolio or public, and then about a third are purely experiments. My most recent experiment is what I'm most known for. It was initially a challenge to build an autonomous founder, which quickly turned into something bigger, and now it's called BabyAGI. And it's kind of kickstarted the autonomous agent trend that everyone saw all over Twitter starting around April.
Amazing. Tell us a little bit about what you guys focus on, check size or stage.
Yes, we are generalist investors. A check size, 250 to 400K checks. Our sweet spot is 3 to 7 million in valuation, ideally with a product on the market, but more guidelines than rules. Right now, deeply looking at AI. It's what I'm spending my time on. It's a lot of fun. Within AI, I'm looking at everything from foundational models to infra orchestration, vertical application, and of course, anything related to autonomous agents.
Awesome. Sarah, I didn't ask you to specify. Can you talk a little bit about your check sizes? And yeah, you said stage, but not check sizes.
Yeah, absolutely. So I think I mentioned we typically invest at seed and Series A. I'd say that at seed, our check size is typically $3 to $5 million. At Series A, it's probably closer to like $10 to $15 million. We do sometimes write smaller checks, like 1 to 3. But generally speaking, we are making investments that are more than $1 million.
Awesome. I want us to talk a little bit specifically about this trend of AI and just the wave of that bubble, if you will, or heated marketplace of investing. But before we get into that specifics, I love asking investors to talk about the things that kind of light your eyes up when you meet a founder in particular. And I feel like there are sort of general signals, general things that all VCs like, but most VCs have been colored by very specific experiences, wins and losses, their own experience raising capital, the things that they've loved. We'll start with Yohei this time. Yohei, are there any attributes or things that you've found, like when you're doing your first call, if you see this, there's something that lights you up?
I tend to look for what I would call like an X factor, meaning like I look for the one thing that really stands out about them, but I don't really care what that is. Like it could be that they're super fast builders. It could be that they're really good at sales. It could be that they speak 12 languages, but I kind of like founders who have like something about them that really stands out, but I don't really mind what that is. Like I almost want someone with one super strength than like someone who's just strong across the board without a super strength.
Say more about that. So what do you think that indicates, or what do you think that can extrapolate into when it comes to being successful as a founder?
Well, I think being a founder is probably one of the hardest kind of self-reflection journeys. I think being a good founder, it's really important to be aware of your strengths and weaknesses, and you build your company around those strengths. I think even the two exact same businesses with different founders should take different strategies. And I think a strong founder understands that and is building a company around their existing kind of strengths and is aware of what they are and working on them.
And so having a very focused, crazy superpower means that someone has like dedicated to something and has that ability to do so. Is that kind of?
Yeah, I'd say, yeah, you probably figured out what you were good at and have spent time on that, or spent time sharpening those skill sets, or have leaned in, or have, talked to enough people, or thinking about what their strengths are, reflecting on that and leaning in, and can communicate that as well, right? I think that's an important part as well.
Got it. Sarah, what about you? Are there one or two things that like tend to really, really excite you when you see it in a founder or a business?
Yeah. So I think, as I had mentioned earlier, I think it's important to have your like intellectual interests aligned with a founder. I think generally speaking, it's important to be aligned with a founder. And one of the things that I've learned over the course of the past 7 years, arguably, learned the hard way, is that like there's a difference between great founders and great founders for whom you are the best investment partner. So I think what I often see is kind of like two founder archetypes, and of course there are always shades of gray, but you have these founders that are like super visionary. They have kind of clear visions, clear ideas about how people will work and live in the future, in the next 10 years. But their strength may not necessarily be on a kind of like breaking that vision down into a kind of concrete roadmap on thinking about, sub goals and how to kind of execute those sub goals within a given timeline. Then you have founders who know what they want to build first, who might have, like a general idea about like the direction that they're headed in, but who are very much like focused on execution, and who ultimately kind of win by making, the right decisions at the right time with just enough information, and hoping that, a series of very good decisions kind of accrue to a bigger vision. I have found that I actually work better with the latter category. And so often, when I'm meeting with founders, I'm kind of assessing like how they think and how they problem solve. Do they have kind of like a more structured approach to like thinking and planning? But do they also know, when to kind of abandon their frameworks and respond to kind of new information? I do often invest in technical founders. And so one way in which I'm kind of assessing this way of thinking is a better understanding how somebody applies their technical domain expertise to thinking about product and market opportunities. So it's a little bit wishy-washy, but I think that what I'm often looking for in the first call is to glean a better understanding of how a founder thinks, and to determine if that's kind of aligned with, how I think and how I work with them.
Very cool.
I want to double tap on something she said, which I
Yeah.
think, which I really liked, which is I do think there is such a thing as a fit, right? Something I often talk about, and even our fundraising, right? Because VCs, we're fundraising too. What helps me a lot in fundraising is I'm not trying to convince everybody I talk to invest in me. I'm just looking to connect with people who want to invest in me as fast as I can. And I think again, it's just one way. I'm not saying that's how everyone should approach it, but if you approach it that way, you really spend your time focusing on identifying the investors who are already likely to invest in you. And that's going to be a mix of like intellectual interest, personality, values, and all that kind of stuff. So just wanted to point that out. And sometimes founders make the mistake of like talking to 5 investors that are not a good match for them, and they just feel like they don't have the right idea when they should be talking to different types of investors. Maybe they should be talking to angels or whatnot, right? Stage, industry, all that kind of stuff. So just wanted to highlight that. I thought that was a really good point.
No, I love that. And I love having opportunities kind of generalize things for investors to take away with them. And one of the things I think is important to take away from that is this, is try to avoid this idea of founders who don't love the no's and don't love the rejection, and who get buffeted around by that. And they're like, well, like Yohei didn't like what I said, and he said he didn't like this, so I'm going to like modify my story so that I become more likable to more people. And what I'm a fan of saying is that, if you try to be everything to everyone, you're not going to be that special someone to Sarah, who's looking for the founder that works like this, or Yohei that works like that. You want to tell exactly who you are and what your story is, like Yohei said, to just make sure that when you do find the right fit, you haven't diluted your message in a way that even the right fit is like, well, they're not really anything, that I'm excited about, right? So I'd love to now transition to what we came here to talk about, which is, now that we've done a little bit around general, are you venture-backable, what excites you all? I started crowdsourcing questions, and I was saying like, here are my questions. And I had people respond in the comments and talk, they're like, well, it's no different than any other tool that you're building on top of, like your database selection, et cetera. Like it's all about team and whatever, which is like a kind of broad way to think about it. But to me, that doesn't answer the fact that all of a sudden, a bunch of startups have popped out of the woodwork and have decided to be AI first, have decided to pivot from the flavor of the day to the next thing. And you know what? A lot of startups are getting funded. And so that becomes, I think, for me and others, a little bit harder to understand, one, what are investors like you who spend a lot of time thinking about VC opportunities within AI, but also two, like, what should founders be thinking about this opportunity like? So this is a broad sort of starting point, and I want to offer the stage or the microphone to either of you. But I wonder if you guys have a quick reaction to the flood of AI startups, or the startups that are building on top of OpenAI, and whether or not you think of a framework or a rubric around what is actually defensible, what is actually venture backable within the AI space. Yeah, Sarah?
So, I think it's important to like really understand, like, is AI going to be your source of competitive advantage? Or, is AI enabling you to develop, some other source of competitive advantage? Interestingly enough, when I think about like both the companies that we invest in, but also the companies that get venture funding writ large, there are actually relatively few companies for whom tech, I think, is the critical source of competitive advantage. Time and time again, we see these companies where, at seed stage, people respond like, oh, I could build that within the next like 2 to 3 months. And it's true, but, perhaps like your community becomes your source of competitive advantage. A new workflow and the way in which you're changing user behaviors becomes a source of competitive advantage. So this is not to say that like tech cannot be a source of competitive advantage. If AI is your primary source of competitive advantage, then you probably shouldn't be building upon like one of the commercial APIs, because the thing that is most critical, most kind of essential to like what differentiates your company from any other business out there ought to be something that is kind of fully within your control. But alternatively, if kind of AI enables a new workflow in getting people to change their behaviors and kind of conform to your new opinionated workflow, if that's your source of competitive advantage, then AI is just an enabling technology. It's just the way that you build. So I think that distinction is relatively important.
I want to stay on this before we go to Yohei, and that first category of building where AI is your competitive advantage. Do you feel like there is room for other startups other than the European startup that this is going to go head to head with OpenAI and Google? Are there opportunities for small teams to have AI be the competitive advantage, or has that ship sailed in your mind?
I think there absolutely are. I think some of this relates to like new modeling approaches, whether it's kind of like new ways of building like mixture of experts, new model architectures, thinking about the role of like causal inference, causal reasoning. Those companies might not necessarily look like an OpenAI or look like an Anthropic. One of the things that has been interesting to me as I've started to explore this space is that I actually often see like some of the most novel ideas coming out of academia or coming out of research, including, when I look at more vertical applications. I think what I see is like a lot of developers who might not have kind of the same strength of understanding of the underlying model architectures are often kind of building like variations on themes, like they're building like customer support bots or knowledge management tools. Their companies end up looking kind of like the like recipes or the examples in like a LangChain tutorial. Whereas those with kind of a deeper understanding of the model architectures and the way in which like the model architectures can be redefined are doing things like thinking about like how LLMs can be applied to weather forecasting or used in planning and robotic settings and things like that. So I do think that like there is space for those with research backgrounds or those who just deeply understand ML. To find kind of applications, to find verticals where their approach is uniquely suited to solve a problem.
Yeah. Yohei, for you, I mean, you are spending a ton of time trying to attract people to you as an AI investor, and that's why you're building in public. The fact that you have been able to spin up something that gets so much attention like BabyAGI on your own shows how, like, I don't know, just shows like the access to the technology in a flashy demo, as Sarah tweeted out, is not necessarily the thing that might make it a big standalone company. So maybe a few words about how you think about the opportunity from an investor's perspective.
Yeah, I mean, I think right now what's amazing is that these large language models have made it easier and cheaper for people to build incredible stuff. And there's so many things that we can build easily and quickly today that we couldn't have even, a year or two ago. And I think that's really why we're seeing a lot of people jump in. And what's really amazing is that with large language models, you don't need an AI background to start using it, right? So you're seeing ideas come from ideas applied to AI from people with no AI background, which is really fascinating. Again, there's a whole challenge of the type of business you should build depending on how much understanding you have on the AI. But I think that's what we're seeing in terms of just like a lot of people building on AI, investors excited. They're just there's problems that can be solved now. And so we should solve it, and we should invest in the founders who are solving those problems. And I think it's that simple.
Got it. So that falls into the kind of the second category, Sarah's second category of like, does AI help you get to a competitive advantage? And then at that point, you're kind of evaluating founders similar to evaluating any other founder that's using another technology to help solve a problem, right?
And as people start building on top of OpenAI's model, which is what everyone started with, we're now seeing new problems, right? Oh, OpenAI using that model might be unreliable. So then we have new problems, then we need new solutions for that. Then we go back in the infra side of things, right? Oh, now I want to run a large language model on my phone. I've gotten so used to it, but I don't always have access to the internet. That's a new problem. So now there's going to be opportunities to build foundational models that fit on a phone, right? And then so as we build, new problems will arise. But I mean, that's why I'm trying to stay as close to it as possible so I can catch these.
Love it. Do you guys have hard stops in 5 minutes? Because I want to make sure I open Q&A just in case.
I'm good till 2:15.
Yohei, you do?
I do, unfortunately.
Okay. I want to open up some Q&A in case you guys have it out there. As you guys submit some stuff in the chat, maybe I'll float this next thing, which is the thing that I want you, Sarah and Yohei, to think about, which is founders are raising and they're feeling like they need to jam in the word AI into their pitch. Do you have any quick thoughts on people building businesses and they weren't using AI before and they feel like they need to insert AIs, or are there red flags that you guys want these people, these 70 founders, to walk away with in terms of their opportunity when raising capital and whether or not to include AI?
I can give the quick answer, which is like, you should look at what's happening in AI in your industry. I do think AI is one of those that will touch every industry. It will impact it. So as a founder in technology, I think it's important for you to know that and to be able to smartly answer those questions. That being said, the depth at which you might integrate AI is going to depend on, like timing and whatnot. Like if you want to adjust your strategy, if you think it's the best thing for you, right? You should learn it, study it, and if you need to pivot into that, that's not a bad thing. But if you've identified a problem and you're building a solution for it and it doesn't need AI and there's still a lot of opportunity to make money, then you don't need to slap AI onto it. But as investors ask you questions around AI, you do want to be smart about being able to answer like why you decided not to, probably at this point in the market. Although, when the hype slows down a little bit, that might change. Is my gut reaction to it.
Cool. Go ahead.
I have like both a kind of like superficial response as well as kind of a more nuanced one. The superficial one is that look, saying that you're working with AI, it's going to open doors. And, if saying that you are an AI enabled X gets you, an initial phone call with an investor, do it. There's no real harm in it. I think, then you can explain why something else is actually kind of your primary source of competitive advantage. Similarly, I think that talking of there are a lot of eyes on generative AI right now, and inserting yourself into that dialogue, it can be good for recruiting. It can be good for potential user or customer acquisition and things like that. But so there's some branding benefits to AI. The more nuanced answer, and I totally agree with everything that Yohei said. But I also do believe that this stuff is the future. Frankly, I'd been pretty skeptical about LLMs early on, having seen a couple of other hype cycles. But it does seem more and more in the future applications will be developed with LLMs. And so, thinking strategically about if and how AI might disrupt your business, I think it's really a necessity at this point. At the very least, you ought to understand, what you could do with AI and what you're potentially like leaving on the table if you don't, allocate time and resources to it.
I didn't say this strongly, but when I said you should look at AI in your industry and see how it applies, I was thinking you'll walk away thinking you should use AI, but I was trying not to be
Prescriptive, yeah.
yeah.
What I want to have people volunteer to speak in front of these before I ask people to raise their hands and talk is just like,
So sorry.
you almost, yeah, I know Yohei has to bounce. Yohei, thank you for joining us. You rarely get a chance to have someone like Sarah answer these questions live. It's very hard to find their times. We're very appreciative of it. We will send out Yohei's social media. You should follow him. But if anyone has one or two more questions, we'll keep Sarah for another 5 minutes. If not, we'd love to give her time back. But I encourage you guys, if you have a question specific to AI and AI investing, this is a very unique opportunity to ask that question. And Paige, I saw the link that you sent me. It's great. But if someone wants to raise their hand and ask specifically about her perspective on AI, I'll give it a 3, 2, 1 countdown and then let her go. And then the rest of us can talk about general fundraising questions, which I know a few of you submitted questions around. Last chance. Okay, Philip. Great. Philip, do you want to come off mute for a second?
Yeah, you bet. Hi, Sarah. Thank you so much for doing this. I was really curious about kind of what you said are your core areas, right? In some of this kind of like fundamental, kind of deeper applications, kind of like the infrastructure layer, the compute layer. It seems like that's where a lot of investors have recently jumped in, right? It's like picks and shovels, like, it's like a kind of an easy bumper sticker. And there's a bunch of startups, obviously, that have come up with that. So I was just wondering, kind of like having, been an investor in this for a long time, right? Looking at this right now with so many startups, is there still room to differentiate? Like, are there any areas that you feel like, hey, I actually underinvested or underfounded, right, in the space?
Yeah. No, it is always kind of funny and at times frustrating to see kind of like the dog pile of investors into the categories of picks and shovels. I've been investing in tools and platforms for almost as long as I remember, and I do it again because like I love it. Like it's probably my favorite category to invest in. All of that said, I actually think like the market timing for like picks and shovels is a bit early. So like, the modeling technologies, the models themselves are changing pretty rapidly. And we're seeing all of these emergent capabilities. Oftentimes, the right time to think about building picks and shovels is once companies have kind of identified like the key issues or challenges related to those core technologies. And I don't think we're there yet. I don't think we're there that yet, again, because the models themselves are evolving like pretty rapidly. But also because like most companies have not had enough time to implement LLMs in production to scale them. And so they don't really know what problems they're going to have, nor does anybody else. I think this is one of the advantages to Yohei's like building in public approach. Like he can see what problems he experiences and then potentially look for, tools that solve those problems. But I think, what we will see in the infrastructure space is that as companies like, Stripe and, Uber, Airbnb, et cetera, adopt LLMs and try to, scale those to hundreds, thousands of users, we see, a new set of challenges emerge. And new startups can address those problems. I also imagine that some of those companies will build their own tools and those will be commercialized, et cetera. But I think we're very, very early innings here, and I think there's a ton of white space.
Love that. Thanks for the question, Philip. I was saying, Sarah, that I didn't see all these digital hands raised. A lot of people talk to you. So if you still have the time, we do want to ask. We have these other questions asked. Karen, are you there?
Yeah. Okay. Yeah, thank you, Jason and Sarah. So Sarah, I definitely agree with you that lots of novel ideas come from academia or practitioners who have a more deeper domain expertise in ML. So question is, well, it usually takes a bit time, let's say a minimum of 6 months or or a year to productionize those ideas and gain meaningful traction. So as an investor who invests in either pre-seed or seed stage startups, do you actually are aligned with this timeline and this having like in reality have patience to partner with those teams?
Yeah, absolutely. So I would say, I think like there are ways to like de-risk product market fit before you've actually built a product. So it might take, 6 to 12 months to build something, but it only takes maybe like 6 days to write a blog post where you describe the problem that you're solving and can kind of like gauge public reaction to that blog post. So I think, content, for example, is a great way to kind of learn about like reactions to a potential product or to a solution to a problem. Early on, we do a lot of that. Like we will talk to a lot of people who we think could be potential users. We'll try to better understand, like, is this an urgent, high priority problem for this set of users? We don't need to give them the tool. Like we can just talk to them about the problem, and that helps us assess the startup.
Great, thank you.
Tim, do you have a question?
I do. Thanks, Jason. Thanks, Sarah. I've got a few. Let's see. Looking at my notes. Which one? How about this? So I'm a non-technical founder, and over the last several months of getting more and more into this world, I've been struck by there are things that I would think technically are pretty easy to do. And then, my buddies explained it to me like, not at all, dude, that would take a year and 17 engineers. And then there's other things that I would think would be really hard. And it's like, you spun up what in a weekend? So just wondering for the non-technical amongst us, like over the, I don't know, you set the time scale, 6 months, 2 years, whatever, but like, what's kind of the like easy stuff that we should be looking at LLMs and ML to do besides what we see every day on ChatGPT? That's kind of, the extent to which I feel like I've fully mastered this. What are the things that are high leverage, low hanging fruit versus years away?
I love this question.
So I have both a practical response and then like perhaps like one that's a little bit more meta. So the practical response would be that like, I think the low hanging fruit applications today are typically those where like, there's like a human in the loop, where like the output of the model is not being directly exposed to an end user. Even when I think about like the support bot solutions that have been most successful, many of those are tools that actually make customer support reps more productive rather than, interfacing directly with users. Those types of applications, I think, are more aligned like with where the technology is today. That said, I don't think in my career I've ever seen a startup fail because the tech didn't work. I'm sure it happens. I haven't seen it. And so like, I also kind of believe like where there's a will, there's a way, and certain problems may be technically challenging. But if you believe that the outcome could be massive, like find the people to solve those problems. So that's kind of the other side of the coin.
Love that. Great answer. Great question, Tim. I think we have time for a couple more. Carl, do you still have a question? I see your hand raised in the list, but you're not popping up. And I think you had been hand raised for a while. Carl Jensen.
Yes, thank you so much for your time. My question is around valuation. My background is in VC for med tech, and the financial models that would last 6 to 7 years because no money because of research and development, no money we made till about year 6 or year 7 at the earliest. How do you value AI companies considering the amount of time it takes to actually build models in the first place? How do you value them on a general 5-year basis or how it may be?
Yeah. So like, I think that the truth about like valuations is that like they're kind of arbitrary. They're entirely made up numbers, and oftentimes I think what drives valuations is market dynamics. Is there competition for this deal? What price do we think will clear the competition? The other way in which I often see the valuations being kind of set is with regards to expectations about the next round price. So, most investors want to be able to get like kind of a 3x markup at, each early stage round. So, if I don't think that a company can achieve like certain milestones that would unlock a let's call it like $75 million post-money valuation at Series A, then I'm probably not going to, value them at $25 million at seed. So often, when we are thinking about, valuation, we're thinking about like, what can you achieve given the round size within a 1 to 2 year period? And what do we think other investors will pay for that kind of like future state of the company? A lot of like the AI valuations right now, like they're kind of wacky. And, I think sometimes like we're just reacting to it. It's like, do you love it enough to pay the market clearing price, even if you think it's irrational?
Yeah.
So be it.
I actually love that question for everyone here. It's just like insight into investor psychology that when people read it or hear it once, they're like, no way, is that, no, that couldn't be how they're actually setting valuations. And it's like 100% true. And it's a big encouragement for everyone to like run processes. If we're advising you as friends, we're like, run processes.
Yeah.
Make sure that there are options, that they feel the competition, right? Otherwise, you're left on an island and Sarah gets to determine whether or not, what she's willing to pay, right? I think we have time for maybe a couple more.
Thank you.
Albert and then Cameron.
Yeah, hey Sarah. So basically what I'm wondering is like, would you rather see a founder go after an extremely sort of ambitious and large project that maybe is kind of an obvious application that a lot of people are going after, or at what point do you want to try to look at some sort of more niche application of technology? It's kind of a risk reward equilibrium, I guess. And how do you evaluate like what is the size of the goal you're going after? And at what point is it, I guess, maybe too obvious that too many people are going after it? Somebody with more resources is going to get there first, if that makes sense.
Yeah. So I would say that like I do believe also in kind of like founder product fit or like founder company fit. Not every founder is kind of like well suited to build an AGI company, but like if that's the thing that a founder is most passionate about, then building something narrower is not going to be a good fit. I've invested in my last investment is in a company that is building a completely new OS. That's a pretty like ambitious initiative. But the founder has been thinking about like the ergonomics of operating systems and how to build something that is like both flexible and playful and extensible. He's been thinking deeply about like how developers and other people who are interfacing with computers work over several decades. So like it's a very ambitious goal, but it's his ambition. It's the thing that he cares most about, has been thinking about for decades, and has cultivated skills to like bring into existence. I've also invested in companies with more narrow initial ambition. So as an example, perhaps like one of my most successful recent investments is in a company called Hex. Initially, the Hex team was like just focused on making it easier for data scientists to share their notebook-based work. They saw that this was an urgent problem. They were focused on like a very, again, narrowly constrained user persona, which was like Python data scientists who are working in notebooks. Since then, they've expanded very meaningfully into like new categories, new user personas, but like they had a passion for this urgent problem. They had conviction that if they solved that urgent, narrowly scoped problem, there would be other adjacent problems. It really does, I think, hinge on what you're most passionate about. You also kind of alluded to competitive markets, and I think the scope of your vision and competitive markets are two separate topics. I don't shy away from competitive markets. I think like competitive markets typically, like if there's competition, it validates that there's an urgent problem often. And like in competitive markets, there are winners. So you just have to have the strength of conviction that you're picking the right winner.
Love that. Okay, I think we're going to squeeze one last question in and then say thank you to Sarah. I did put her Twitter profile in there. I think she's a brilliant and fun thinker. Great Twitter follow. So everyone go follow Sarah. Last but not least, Cameron, good to see you, man. How are you?
Doing well, Jason. Thanks for organizing this. And Sarah, great chat. Really appreciate it. I'm Cam. We're building a large language model within orthopedics specifically. And my question is basically similar to what has been asked before. How do you evaluate a founder or a team that doesn't have strong technical or like a strong CTO as a co-founder? And I bring that up because my background is in product. I've led engineering teams and specifically within orthopedics. I've published papers. And I think from my perspective, our core value prop or core defensibility is that we're building this LLM based on clinically validated data through our partners, and that care workflows, those can't be replicated easily because that data is not easily available. But
we lost Cameron.
Yeah. We're not raising it, but when we do go out in the market, it'll be like a code or another LLM. Can you hear me?
Broke up a little bit, but Sarah, I think like if I were to extend a question, maybe it's more like, what do you think the risk for a team is that you'd back building so much around LLMs that doesn't have a technical co-founder? That's another way that I would ask that question.
I think an important thing when you're talking to investors is again, to kind of like address that question of like founder product or founder company fit head on. I think like what you were alluding to and the way that I might frame this to an investor is that like you are uniquely suited to be the CEO of this company, both because your prior experience in orthopedics means that you have a Rolodex, you have access to people, to connections that will help you get the data that is necessary to make this company successful, but also with regards to domain expertise, in a field like LLMs for orthopedics, perhaps like knowing about kind of the orthopedics field is more critical than knowing about kind of the ML principles underlying LLMs. As I mentioned, like not every company is going to have a differentiated approach to building LLMs, or like not every company needs to have AI as its critical competitive advantage. Perhaps your critical competitive advantage is really the domain expertise in orthopedics and how you apply that to make the company successful.
Awesome. Makes sense, especially in an early stage where there's not a lot of defensibility and open tools out there anyhow. Thank you.
Awesome. Yeah. Sarah, thank you for letting us steal an extra 15 minutes of your time. I thought your insights were great. I wrote down a lot of things that I want to share with other people, and it was generalizable outside of just this AI space that we're in. So thank you so much. If there's anything you want to share or push people to, feel free to use this platform right now to do it. Share with me later. We'll send an email out summarizing everything. But yeah, thank you so much.
Yeah, no, thank you. I mean, this was awesome. It was great to chat with you and Yohei and to speak with some of you today. Great questions.
Awesome. Okay, we'll let Sarah go. Everyone, look out for the follow-up email. I think one of the things that I wanted to say about what Sarah had pointed out is like we were trying to give you guys insights into what it means to be venture backable, what excites a VC. But from my side, if I'm encouraging or advising any founders, there's a little bit of, yes, you need to know what VCs want, but I don't necessarily want you all to like work backwards from the VC and then be like, well, then this is what I'll do. I'd love all of you guys, I think Albert had this question about what should I work on, this or this, based on what you want. I'm like, I want you to work on something that you're passionate about, that you want to keep building towards. And if that happens to be pointed in a vector that catches a VC's eye, that's going to be the most successful version of the company for you. Be influenced by everything you're learning here, but at your core, like, make a decision based on what's exciting to you, what your unique insights are, what your competitive advantage is. So stay tuned for everything else. Sarah, we'll be in touch, and hopefully we'll see you guys at another event. Thanks.
Awesome. Sounds good.
Right.
Bye.